Call, let's go. Doing well. Feel like we're all doing well. Hopefully that is the case. Couple things I want to go over, and then I think Apollo told me that there's questions. If you guys want to throw, oh sweet, there's community call questions. Nice. So we'll do like a Q&A kind of thing at the end. First thing I want to do is just like, now that we have some analytics, you know, we can go over like state of the protocol, because this shit is rocking. So we got here. I'll screen share the Dune dashboard. I'm sure we've all seen it, but you know, it doesn't hurt to look, right? Yeah, I mean, it's humming along, you know, which is really awesome to see. Okay. Hopefully the screen share works. So we got the flat line, 90% staked, which I realized, you know, 3 + 3, 9, 90. Coincidence? I don't know. We got the treasury growing quickly, you know, risk-free value up to 287 or 270K almost. Market value up to like 4 million. If you don't know what the discrepancy is, it's because we have to mark off a whole bunch of value from the treasury or from the LP tokens when we put them in the treasury so that we get this risk-free value. So we only mint against this, but on the market right now, they're worth this. So, you know, a little bit of a discrepancy here, just a little bit. Pool share, just steady growing. I actually haven't seen this now, but what, 42%? That's pretty crazy in the span of 11 days. Just consuming the pool, which when you pair it with like the amount of liquidity in the pool, it's even cooler, you know, because we're just setting a floor. I think that means that we now own as much liquidity as was in the pool when bonds began. So that's pretty crazy. Yeah. Down market value, this is looking a little bit high. I'm going to talk about that later. OMI steady growing. Circulating supply steady growing. Feeling good. So yeah, that's pretty crazy. The other thing that I want to talk about real quick is, you know, we got the auto report back. I'm going to put this out. I'm just going to run through it real quick with you guys, though. You know, there's 2 medium, 2 low, 2 informational, and 1 undetermined. I would honestly argue that they're all kind of low to non issues. We're going to go through them. One of them like is, but we don't use it. And so like, you'll see. So like first one, like with the rebase, with the rebasing of the SOM contract, there's like a only monetary policy tag, but it points to the same address as only staking contract. And so the issue here is like, oh, you don't need to have both. You could just use one. You know, it's unnecessary to have 2 things pointing to the same one. I agree. It is kind of a dumb implementation that was sort of missed, but nothing bad. You know, just fix it next time. Same one with this. So this is with the rebase, the way that it works, you know, is someone has to come into staking to trigger the rebase. And so this is basically saying, well, someone could come, you know, pull a sandwich bot move and like front run you into staking so that everyone rebases up with less supply, and then you come in after and you miss it. And that's true, but we haven't seen it. I don't see any real incentive to stay on the outside and then just sit there waiting to sandwich someone for the rebase. I don't know why you wouldn't just be in staking anyways. Not too concerned about it. I also don't think that there's much that we can do about it. I'm going to put the whole report in the chat after this, by the way. So don't think that this is the only chance that you get to see this. But I mean, that one as well, not too big a deal, I don't think. This one is just a dumb math thing where divides by 10 decimals and then multiplies by 1. So instead, it could just be divided by 9 decimals here. Again, dumb, doesn't matter. Maybe, an extra gas cost of a cent. Not the end of the world. This one is the fact that the staking contract has a function to, or I think it's SOM has a function to set the staking contract. This was because the intent was to be able to migrate without having people migrate from SOM, right? Because that's annoying. Everyone's gonna have to unstake and then restake somewhere else. It's like, oh, we could just point to a new staking contract and then they don't have to do that. But the issue is that the staking contract holds the entire non-circulating SOM supply, and we can't transfer that. So if we want to move the staking contract, we do have to do that, unfortunately. Again, not something that is malicious or exploitable or anything. It's just oh, ensure that it's only initialized once because you don't need to do anything with it. This one is just a weird the decimal conversion is a bit weird here. Again, it because we're only dealing with 9 and 18 decimal numbers, it always comes out to the right number. So nothing, that breaks anything. It's just, we could have done it better. It could be more efficient. So we will fix that. This I would say is the biggest one, right? Trust issues are always a big thing. The funny thing though is that this is all a helper function that we put in the treasury to facilitate reward distribution, but we have since offloaded that to separate contract, and we have not touched this a single time. So never use this contract, or never use the function that this is in regards to. I think that they are set, but even though they look on the treasury contract, it's never been called, and we're gonna migrate it soon enough. It's basically just saying you should set this in once, or not really have the ability, because you could change where it's pointing the LP rewards contract, and then change where that money gets sent to. Never used, so it exists in the treasury right now, but for no purpose. That's the biggest one though, and I'm happy to talk about it. And then the last one is just that we have this TWAP code in the Olympus token contract that we don't use. So we have it there. I do think that we might go with a different implementation to use a TWAP, because we're going to need one soon. We will see, but it's waiting for us if we want to use it. Yeah, otherwise it doesn't really matter, it's just there. Yeah, but that's about it. So I will drop that. Sorry. I will drop that in the chat at the end of this, and then y'all can look at it yourself. Next order of business is DAI bonds. So this is something that I've been playing with a while, and I wanted to see how the LP bonds went before, really bringing it up. I honestly feel that the bonds are a better mechanism to do sales through than sales themselves. I think that it is market neutral to a degree. It tracks the market, but only based on participation. It creates its own market, basically, that's somewhat detached from the actual sushi market. Basically, the only difference right now is because we're doing it with liquidity, we have to discount the value of the LP share by a significant margin. So I think we treat an LP share as worth 0.3% or we treat it as 3% of its market value. So $1,000 LP share comes in, and we treat it like it's worth $30, because that LP share has a bunch of risk attached to it. It can go up in value or down in value based on what the market does. Treasury can't be exposed to any of that risk, and so we discount it all the way down to its minimum value. So we brought in, like $4 million worth of liquidity in the past week and a half. If we had done that with DAI, same amount of inflow, but with DAI instead of LP, total supply would be at 4 million. Circulating supply would be similar, but we probably would have started jacking it up at this point. But it would be a lot higher, because if we do it with DAI, for every dollar that we bring in, we can treat it as worth $1. So I honestly I basically want to kickstart the conversation on this. I personally feel like they would do a better job at what sales do than sales. We also have seen it in action. We know that it works. We have the code ready to do the DAI bonds. I would like to deploy it tomorrow and get that into the world, because another thing is that we basically, unless we want to like really kick up supply growth, we can't put very much room in the DAI bonds. So if we make it $100,000 every 5 days at the current supply, that's growing total supply by 40%. Like a lot, because every dollar is equal to a dollar. So I think that it's something that we should introduce right now, and then allow it to expand as it will, and as the LP bonds will, where as total supply grows, more capacity is created, and it can kind of do that in pace with the market, because that's one of the things, like no, we're not gonna. Yeah, so I'll be in the chats and we can talk about that after this. For V2, so I just want to like real quick talk about what the V2 is going to be. I basically like leaked it at this point. So basically, I'm thinking we would have LP and DAI bonds, or not LP and DAI bonds, LP and reserve bonds. So we have a treasury that facilitates multiple USD assets. I do think that it's too soon to do the index. I think that governance should be at a further point before we're talking about, adding new assets into the treasury, because that can very quickly spiral into, now we've got a bunch of shit in the treasury and we are extremely exposed to the market. Doesn't matter if you like the bag, doesn't matter if you think that the bag is going to go up, like that's just exposure that now the treasury has taken on a significant amount of risk. If you haven't noticed, the treasury is not supposed to take on risk. We might want to diversify, but not gamble, not invest on behalf of the treasury. But we can do like-kind assets right now. So instead of DAI, we could have fracs, because they're both worth $1. And then, additional bond pools with those like-kind assets as well, liquidity pools. Yeah, and then some additions to automate more things, reduce the number of dials. The good thing is that the bonds, we set the bonds in a week and a half ago, and they have not been touched a single time. The configuration has stayed the exact same. The market has regulated it beautifully. That's what we want, is like, not fiddling. So I'm trying to get rid of the things where it requires the fiddling, because it's annoying and it, shouldn't be a long-term solution. The other part is multi-asset staking. So I leaked a little bit of this, the other day, but basically like putting in place a staking system that would allow you to switch the underlying asset behind your own into another asset. Now you have exposure to ohm still, but you also have exposure to that. But the exposure to that shows up in your balance of ohm. So it offsets that price onto your balance, and then your balance is still exposed to the ohm price, which is a very cool dynamic. The way that I see that going down is we approve assets via the DAO. The reason for that is that there are, exploit attempts that I could see coming from, let me, use my reserves to buy some like a liquid shit coin and then go pump that up sell it, and then now I've got 10 times as much ohm, which is, it cost me like $10,000 to go pump that up, but now I have $1 million worth of ohm. That's solved by just using liquid markets, where it's more expensive to push the price up of something than you're going to get out of it on our end. So it's also cool because it creates a situation in which, we as a community can constantly be integrating new things, which I think is awesome. We can be collaborating with other projects. We can be working together on how to, implement strategies using their assets in this multi-asset staking. So this was kind of my original vision for this whole thing is like, you have, we create a strategy with a pool token that, will take, we'll go buy wrap Bitcoin, it'll plug it into Badger, and then it'll give you the pool token there. And now you are backed by yielding wrapped Bitcoin. And then if you want to unroll it, you can. But like, we can kind of like curate strategies, and like, especially if we can make it easy on a UI level where, just, I feel like it becomes a no-brainer of like, you could either do these things alone or you could do them here and you get the same exposure, plus you get more in our case, but you have no liquidation. You conceivably have no interest. Yeah, that should be cool. One other thing that I wanted to, or actually, I guess we got a few. I'm going to petition the Rari governance for a fuse pool. It would be great if you guys could support on that. I'm really excited about that. I think that's going to be great. One, it gives the opportunity for, people to borrow against their own, but it also, it's so we would want to have the borrowing cost for this high, right? Because if it's not, you can conceivably go borrow the ohm, stake it, and then capture the spread, right? You have no price exposure to the ohm because you just need to pay it back, but you're earning more from staking than you're paying to borrow it. On a small scale, not a terrible dynamic, because it creates liquidity for lenders. But where it gets really cool is, the issue there is that you're going to pay a very high interest cost. So the only time that would be done would conceivably be to arbit with staking. But the other time is with bonds, it turns them into like a cash and carry trade, where you can go get a bond, you're locked in with an amount of ohm, then you can go short some of that, reduce your exposure, and then pay it back with the bond that vests. Which, might sound scary, like selling. I think is really important for a regulated market. Like it basically drives volume and it drives liquidity into the treasury. So that should be really cool. It would also keep the borrowing cost, really high, which, is good for anyone lending in the pool. Stoked about that. So, when that goes up, I'm going to try to have it up today. Or wait, no, we got to get the TWAP set up before we can petition that. So maybe tomorrow, but then, show out, go rally the Rari guys and, get that pushed through. I think it'll go through, but, we should show out either way. And then one more thing before I'm going to bring some other people up. Like one of the things I've been noticing is there has been some dilution in the staking pool. It is mainly attributed to the bonds. So I think in order of like most to least dilutionary, it's like bonds at the top, and then lower than that and pretty much tied are the POM and the LP staking. And so I am opening the floor to discussion on how to deal with this, because it's been like, I think 8% more total supply than there was, or versus like staked growth. The good thing is that a very large portion of that has ended up in the liquidity pool, and that pool is just growing. And so it's not as much dilution in the staking pool, but there is a pretty simple solution to that. It's basically just increase rewards. I've been hesitant to do so because, I already feel like we're getting a little heated and I don't want to add fire to the flames. And so, I think it would be good to have a discussion about this as a community, try to figure out how we should tackle this, because it's, basically this is the cost that I see us paying right now for, the future. So we have onboarded, a lot of supply into the treasury and a lot of liquidity, right? So we've taken in 4 million in liquidity and we've paid for it. And so the paying for it is dilutionary. We need to create new supply and give it to the person that gave us the liquidity. So by storing up, we all of this future supply, 160,000 ohm at this point, that's kind of the cost of it, is that now there's more supply out in circulation relative to what we have, then the pool share drops a little bit. One of the solutions that I was thinking about was, a couple, we could just run hot and just jack up the APY. I don't like that too much, because I feel like when people get conditioned to it being at a higher level and you start to not notice that it's higher, but you sure as hell notice when it goes lower. I don't know how much we should entertain that basic psychology, because it's kind of a lose-lose. Another is to just choose a time when we drop a whole bunch of ohm into the staking contract, and just one bang brought back up. That one is more questionable as well, because maybe we just pump and dump into that time. Another is to do that randomly, and do it either in a one lump sum where it just goes randomly in there, no one knows when, but you just know that sometime in the next days to weeks, there's going to come a day where there's an 8% rebase, or an 8% day. Actually, it would be a 10% day, plus 8%. So 5x rewards for a day. And then the last one that I was thinking is we could kind of just make it a random weekly, bi-weekly kind of thing, where just sometimes rewards are 2x. And that's how we deal with dilution, is that every couple days cool, the APY is way higher, the 5-day rate is, or the rebase rate is 1% today instead of 0.6. Nice. It's gonna be a good day, Interested to hear you guys' thoughts on that. I think it is something that we should at least acknowledge and formulate on what to do with. Okay, so one of the exciting things that I feel like we have been up to is working with Kevin. Prometheus at DefaultDAO. So Default is it's a DAO framework, although we realized yesterday that it's a little bit misleading in terms of what they are trying to accomplish. Do you want to go into it, or should I continue to botch it? And can you talk, Prometheus? Okay, so basically Default is a organization structure in a way of facilitating collaboration between decentralized organizations. I'm super excited about it. Basically, should make it very easy and scalable to build out a large-scale decentralized organization. I feel like that is one of the things that I've struggled with through this whole process. Has been DAOs are hard. It's honestly a challenge of too many, having a lot of things to do and a lot of people that want to do them, but it's really hard to keep those people organized and stay on top of all of them, make sure that people know what they're doing. And, it takes infrastructure that's just not in place right now. And I thought like, you know, a little naively would just kind of like be able to arise, and that has not been the case. Luckily, I met Prometheus. Can you talk?
Hey, can you hear me?
Yeah, yeah.
Ah, okay. Yeah, keep going.
Cool.
I'll fill in the details later.
Okay. Yeah. I met him through like a mutual friend. He has been working on, you know, that exact problem for months, if not years now. Um, you know, which is really awesome. I'm super stoked about default. We basically want to trial it. Well, they're doing a trial, and then we will do a trial, and then, you know, hopefully we can pull all these lessons from it and then implement it here, on a, like, you know, and really bring, or, you know, make the DAO and OlympusDAO true. You know, let's make OlympusDAO great again. Uh, so
Yeah.
with that, I will pass it on to you.
Yeah. Thanks, Zeus. Yeah, to just add a little bit of clarification behind like what the idea of default is that, I'm a community member, just like a lot of people on this call for a lot of the different tokens that, I have. And one of the things that I feel frustrated about as a community member is that I have a lot of ideas, and thoughts about how we should build things, products. Like one of the things, an idea that we could have right now is like maybe we record these calls and we publish them as a podcast. Maybe someone else wants to do that. Um, Someone else might want to like transcribe marketing materials that we can kind of distribute. And all of the different ideas that we have collectively is probably going to be more productive than, any centralized team trying to come up, with these like strategies and pay people salaries to do that. I feel like that's been the vision of DAOs all along. But there's really no tools or applications where it's easy for a community member to kind of see what are the different opportunities that exist in that community today. You're investing your time into the betterment of this community. And for that, I personally think that we should get rewarded, for basically spending a lot of time and energy into growing this. And it's really a collective responsibility. So the idea behind default is to build a protocol or a framework that makes it easy for all of us to kind of input ideas and thoughts into what the vision for a project should be, how much, other people should be rewarded for doing work to kind of move that vision forward, but done in a collective consensus where, maybe there's an application and we're all just adding inputs and looking at the different options. And that's kind of the, application and the idea behind what we're building for default. And the idea is like, different projects like OlympusDAO can take what we're building with default and build their own DAO, which is, why the name was default. It's just the default basically settings for the organization, how we want to do things. And it could be different from community to community. And so, yeah, I'm really excited to work with Zeus on this. I think that, Zeus has a lot of great ideas, but more importantly, he has a really genuine vision for, turning OlympusDAO into something that's truly community driven, that we can all like be a part of as equals. And I share that vision too. And so, I'm excited actually probably to be working with all of you guys, in the future at some point.
Thank you. Yeah, I'm really excited too. Like we're gonna get there. You know, it's a little tough and we got growing pains, but we're gonna get there. Next one is, you know, we announced ANO a couple of days ago. I'm gonna bring 18 up, and he's gonna talk about that a little bit and just, you know, kind of what we're up to there, and maybe like put the call out. Yeah, and we want to trial default first on the ANO side, with one of the cities, and so that should be really cool. So 18, can you talk? You should be able to unmute yourself. All right, we're gonna, you know, basically we're in the pretty early stages of that. You know, we weren't kidding when we said that we had a vision, but not really a plan for how to get there. Um, you know, the good thing is that we have all of you beautiful souls, and you know, an idea that people seem to be gravitating towards. And okay, here, you want to go for it? I see you unmuted. Um,
You have to keybind the push to talk if you haven't yet.
oh, really? I thought I turned it off.
Yeah, I had to like spend some time figuring out how, but it's in the settings, 18.
Okay, well, we'll give him a second for that. I'm sorry for the delay. I meant to turn that off, and I guess it did not work. Okay, here we go. You gotta hold it down.
Okay.
There we go.
Yeah. Thanks, Zeus. Hey, everyone. Happy to tell you a little bit about Alpha Omega and how you could get involved, I guess. Glad to see that some of you already migrated to the AO Discord. Really stoked to see how we find a way to structure building this as a community. And this ties very much into what Prometheus was just saying. And the whole default thing, I can see it for sure being implemented in one of the cities, but also definitely inspiring how we want to construct the whole governance going forward for the whole of AO. For now, me and a couple other members have been building a framework for what the use case of AOM could be in a multiplayer virtual open world game. The core of the lore is being written, which will expand upon the more structural layout of the two-city model. One of the members already started working on lore. He will soon share like a 10, 20-page document of the initial lore. I'll encourage everyone to read through it and offer critique. I'm excited to see the conversations. Yeah, if you're a writer as well, you're really welcome to contribute to the lore. There are work channels dedicated to each of the project's working fields. And if you haven't already, feel free to drop in and introduce yourself, join the conversation, and contribute to the collective building of the lore. Yeah, for those who don't know, the general idea is to have two neighboring cities, Alpha and Omega, with each eventually having their own in-game currency. Each of the cities could figure out the tokenomics for themselves. So if you ever wanted to create your own currency and governance system together with a bunch of opinionated big brains, then this is really an optimal experiment to be part of. The logical way to begin building this world, I think, is to first establish the fundamental game mechanics, lore, and economic models. In regards to the game mechanics, each of those cities will be built on a shared platform, built together by us as a joint community. So at this point, the division in the cities exists only in the rhetorical sense that you can join one of the community channels, either Alpha or Omega. And there are also private channels for more secretive content and game theory discussions. You can be tagged as either an Omega or Alpha dweller. At the moment, we're assigning roles manually, since that way we have more of a chance to mitigate spying and also not have bots enter the private chats, etc. But if you want to already choose a city, once you have your dweller role that's been assigned, then you can enter into private discussions and start to push ideas for what each city could have as their governance structure, ideals, philosophies, attitudes towards market making, distribution of power, and yeah, the form of the political apparatus of each city. It's important to emphasize that together we're framing this as a building of a civilization that is based on a multiple city model. So right now, since the game is only semantically being played and is mainly an ideation phase, I mean, soon we'll begin constructing a beta, but we should prioritize making a solid and long-lasting platform for both cities that will be robust, secure, but also flexible to whatever the cities will want to implement. Yeah, should I talk about, yeah, I mean, so far I've mainly framed a use case for Alpha Ohm. That was one of the first things to make clear. I proposed a use case and so far haven't gotten any negative response, and it seems to be agreed upon. So I'm just going to explain it, and so you guys get a mental image of how I personally could see the map of this world being structured. So if you hold Alpha Ohm, and you're interested in this side project and want to contribute to its creation, for now, the future use case would be effectively to pool Alpha Ohm together with a group of Alpha Ohm holders in order to establish a pantheon. So thinking of making 2 main pantheons for each city and smaller ones for sub-communities. And each pantheon, therefore, will have a different amount of Alpha Ohm in it, predicated by the amount of users and their amount of Alpha Ohm allocated to be locked in the pantheon. The amount of Alpha Ohm will then dictate how much land will be generated around any given pantheon. So structurally speaking, there would be literally no tiles before the pantheons are established. In that sense, Alpha Ohm is rather a land creating token. Users could then trade and settle in that land, and each pantheon will figure out its own mechanism for giving out rewards or services to its landowners. To eliminate the problem of a territory vanishing because of someone taking out Alpha Ohm from the pantheon, we could set the contract so that it's functionally a multi-sig wallet that prohibits anyone taking their Alpha Ohm out without consent. I mean, this isn't ideal, of course, and we can hash this out for sure. I'm interested to hear better ideas, but essentially the question would be, like, why prohibit someone from retrieving their Alpha Ohm out of the pantheon? I think it would foster like a community-driven mentality for the project, but also limit people establishing pantheons with abandon and exploiting the system based on early allocation. I mean, each user would have to choose carefully where they would want to allocate their Alpha Ohm. Beyond that, each pantheon can theoretically give additional use cases for its Alpha Ohms. So basically, if you want to trade Alpha Ohm right now, I mean, there are no endorsed pools, and like you could trade OTC, but just take into account that the in-game currencies will be predominantly Alpha City tokens and Omega City tokens, with Alpha Ohm being an initializer currency, with additional use cases left to be decided by you, basically, as a community member, to decide upon additional use cases with the mutual agreement of your pantheon. So yeah, I mean, the underlying motive here is to encourage a genuinely special community like this to together build their own autonomous or semi-autonomous civilization, with all the demands and perks that such an ambition entails. Of course, I think the ambitious nature of this project could be a good way to test how a DAO can organize and incentivize content creation. I mean, such a grand structure could have a slow enough pace to create longevity as a crypto native community that is currently a side project of Ohm, but I mean, it could also influence Olympus's future decisions by allowing a freer space for more experimental ideas to be approached in-game. Like, it could be that we decide to implement a novel idea in Olympus eventually, but the idea only really was worth implementing if it was first tested in Alpha Omega. Yeah, so if you're an investor of Ohm, one thesis you could have about Alpha Omega is to think about it as a long-term testing ground for economical experiments in a smaller market field that could eventually strengthen Olympus in the long run. Yeah, is that enough?
Yeah, I think that was awesome.
Okay, cool.
Yeah,
Yeah,
I am.
Yeah.
Go ahead.
And I think the top priority right now is to find an experienced game designer and also developers that are either already in the community or could be sourced through the community members. Yeah, if you are such a person or know of one, please get in touch with me or Zeus, or introduce yourself in the workspace channel. That would, yeah, I think that would greatly help with establishing a roadmap. We've already had some people reaching out with great ideas of how to implement the project and in-game governance as well, with default as well. And it's of course crucial that we have in-depth conversations of how the DAO infrastructure should look like. So people who are working on ideas in this field can really shape this to be one of, I don't know, in my opinion, one of the most optimal test grounds for a variant governance structure, where you could have variant governances competing with each other. Yeah, I think that covers it for now. We could have more in-depth conversation in the Discord. But Zeus, if you'd like to add anything.
No, I feel like you hit all of it. I like thank you for speaking. Thank you for, having this vision and, helping bring it into reality. Like I'm very excited about the Alpha Omega. Like I think it's gonna be a lot of fun and it's also gonna be really interesting. And it's gonna be a really cool opportunity for people to work together in like a collaborative but low stakes environment. Yeah, so get involved if this sounds interesting to you. I think that 18 is doing a really great job of organizing people and helping, guide discussion. But like, this is definitely shaping up as a community driven project. And it is really cool to see the amount of contribution and enthusiasm from other people. I'm super excited about that. I guess as our last thing, and then I'll Q&A. Bring Fred up, and he's going to talk about the book club, the Olympus book club, which is also pretty lit. Going on mute, Fred. You should be able to. You just got to do like the push to talk thing. Yeah, we're cultivating that big brain energy, and Fred seemed like the natural guy for the job. We might have just lost him though. Yeah, I think he actually maybe. Oh wait, no, I see you. You unmute. Sorry. Okay, well, let's see if he unmutes like midway. This. Basically, we're gonna do like a book club kind of a thing. I think that it would be cool. Here we go. Let's go.
Hey, you can hear me, Zeus?
Yeah. Floor's yours.
Awesome. I had to figure that out. So yeah, the book club idea just kind of came from.
You got to keep the push to talk button down.
Is it good now?
Yeah, you're
good now.
Yeah.
Okay. So I have to hold it.
Yeah, you gotta hold it down.
Okay, got it. So yeah, I guess I'll go pretty quickly then. Again, the book club idea came from the general chat, just trying to basically solicit ideas about what people have been reading that kind of help them prepare for the DeFi space or the crypto space or decentralization in general. And then it seemed like a good idea to compile the list of everything that we were doing. So you were gracious and started a chat for us. And since then, I was able to put all the book selections together so that we can go over them and eventually have a vote on it by the end of this week. But anyway, we're thinking that the loose format will be the first week will be spent presenting and selecting a book to read. This again could also be found in the initiative section that Zeus kind of outlined. We're pretty much going to stick with that, at least as a beginning framework. So when Zeus shares the chart, or whenever he posted on the book club side, you'll see that the chart is it has the book title, it has the page count, and it also has the OMIs that either recommended it or as well as kind of commented on the book selection. So when it comes time to pitch in the first week, any of the OMIs that either recommended it or even commented, or anyone who's familiar with the book and really wants to see that book come through as the book of the month is allowed to do a quick pitch, written pitch in the chat discussion. So those pitch will just kind of be flowing through the chat, I guess, for the first week. And then we'll eventually have a voting mechanism so we can decide on which book we're going to pick as our book of the month. And then the second and third week, we'll just be reading. and then fourth week we'll come up with a way or date and time to do the discussions. We had over 55 books recommended. They're far-reaching in subject matter. I trust that there are some parallels between the book subject matter and what OMIS is doing. But I think more than likely we'll probably settle on something dealing with finance or decentralization to begin with. The only books that I excluded from the list were trilogies. There were about 2 or 3 trilogies that were suggested. Because we're doing like a monthly book read, I feel like it wasn't necessary to consider those. So I got Zeus.
Sweet. Okay. One thing that Fred had as an idea that I think would be better than what I laid out is like 3 votes instead of 1 when we choose the book, just so you don't have to choose like, you know, if you're tied between a few, you can just like throw votes for multiple. Yeah, I think that's gonna be awesome. And kind of similar to that, but you know, a little less, you know, like intellect wise or whatever. Adam had a really good idea for like a movie night that we could do as well that I thought would be fun, where, you know, we choose some movie on, you know, Netflix or something. And then like, you know, OMIs all start at the same time. We can like chat in the chat about it or something. I thought that could be really fun. Just, you know, maybe we have to do multiple showings because of time zones, but like just as like a community activity, you know, it's pretty easy to watch a movie. Would be fun. So I'm gonna ask him, you know, to kind of get the ball rolling there, and we could do a similar selection process and then choose a time and a date. And then yeah, you know, every like 2 weeks or so, we just kick back, we watch a movie. Would be cool. Okay. That's all that I've really got on the plan side. I'm gonna try to not take too long, so like maybe we'll do 10 minutes of questions. Okay, state of the audit, we're done with that. Oh, what's the plan with the DAO's holdings? Okay, so the DAO is currently farming with LP tokens. We've earned like 250 sushi now, so that's cool. We have a lot of ohm in there, more than I think that we should. My idea was to send a bunch of that into the staking distributor and use it to subsidize those like higher rewards to correct for dilution. Interested to hear thoughts on that. I think that we can correct that back down. Yeah, because I think there was like 20,000 ohm in there or something, some very large number. So we can kind of get those into the staking contract. Okay. If ohm is currently where does the delta between 1 ohm or 1 DAI and 1 ohm market price come from? Expectation, like in the future, he says he understands like volatility, loose policy. The expectations of future profit plus or not even expectations of future rewards, the rewards that have been accumulated. So I think a good example is to think, you know, if right now we have twice as much supply in the staking distributor as we do in staking. So basically, like, you can consider 1 ohm in staking right now similar to 3 ohm in some period of time from now. That should end up as the dynamic where, let's say you know that in a year from now, your 1 ohm in staking will be 3 ohm. Now the actual intrinsic value of it is 3, but it's only going to actually do anything about that intrinsic value under 1. And so you have a real value and you have like a present value. The market or the protocol doesn't do anything to keep it above that real value. It's actually constantly putting downward pressure on that, but you know, the difference can only be short term because the supply growth will correct it over the span of time. And so you get a dynamic where, you know, nothing is forcing it to trade at this level, it's floating, but you know, long-term minded people can take that trade with no risk, which should regulate some amount of premium above even that real value and like a steady and stable range around that level. if that makes sense. There's also like, you know, I want to do some stuff with like high beta derivatives, where we can like imprint volatility onto a separate token, and then, you know, with that, like offload the volatility off of Ohm. That's something that I want to talk about soon. But yeah, I think that's kind of the baseline of it, especially when you deal with like lower numbers. Did the current state fulfill your expectations? I think that we are doing fantastic. I think that, you know, I didn't expect such rapid growth, but I think that we're managing it super well. Yeah, like, you know, I do think that the price has been climbing up a little bit too fast. I hope that you guys remember that, like, you know, you can have the price flatline and you're still making 10% week over week. You know, there's no reason to pump this thing. Please, like, I think that we're at a good level now where there's no need to push it higher. And when you do so, like, the issue is that we're all just apes that, you know, see number go up and we get happy, and then see number go down and we get sad. You know, like, don't put yourself through that. You know, we can just literally like go sideways, and perform better than anything else. You know, like, yeah. So I would love to see, you know, you guys as treat this thing like a currency. So I think that this is like a mental shift that might help like put this into context, is that you buy and sell dollars, or, you know, whatever your native currency is, every single day. You know, you sell dollars to buy a hamburger. You know, buy dollars with your house. You know, if you flip what you see as generally, oh, I went and bought this thing at the store, if you flip that into I sold dollars at the store for that thing, you can kind of understand how a currency can arise. I would love to see more just like participation in transacting with Ohm, because that's what stabilizes it. Is, you know, like, that's the best way to stabilize something, is just volume, like liquidity has a role to play, but like, you know, you guys can kind of affect that in the market. Like, the only real way to transact right now is in the market, but that is still transactional use as far as I can see. It's the same kind of idea. It's just that, you know, it's more direct in one place than on an actual economic scale where, you know, you're buying and selling your Ohm everywhere. You know, we're not quite there yet, but that would help, I think, you know, just as a community, kind of like, you know, maintain the number don't go up, stop it, bad ethos, you know, just number go flat. Okay, now that all the functionalities are working well, what are the plans to increase market cap to next levels? I don't think that we need to move that fast, that quickly. Like, you know, we have been growing at a very pace, and I don't think that there's anyone who should want us to go faster. Like, if you do, you should really reevaluate, like, why, like, you should not feel so desperate to have it go up so quickly. So if you compare these returns to like anywhere else, it is vastly better than what you're going to find. You know, you don't, like, 10% week over week, or 10% in a 5-day period compounding is an insane return. You know, don't ruin a good thing because you want, you know, a 10x in a week. You know, like, we should really build up to the just go flying through there, because that's where you know, you bring on a bunch of weak hands and then they fuck you over at the end. Okay, how market cap growth will affect Rebase and APY. There's no curve describing it. It's just that, you know, as we get larger, it becomes, as circulating supply gets larger, it becomes harder to grow it relative to itself. I don't think that we're really anywhere near that point. You know, for example, if we were to bring in the level of assets that Faye did, we would keep up 100,000% APY for the next year and a half. You know, there's a good amount of growth ahead of us. So I don't think that it's anything that really needs to be worried about right now, but it would just result in a lower APY. But, you know, as risk falls because supply is larger and now the floor is closer, you can compensate for that with less APY. How many months worth of rewards should we aim to accumulate? I'm sorry, I'm not getting it. I just don't want to take too much time. I think that like 4 to 6 months would be a really good range. You know, getting above the 6-month mark would be awesome. which I think that we can actually do with the DAI bonds like relatively quickly. Like if we took in the amount of money that we take in with the LP bonds with the DAI bonds, I think we would have enough rewards for the next like 8 months. So like, yeah, I think that 6 months would be a good point to target. Considering the runway, what is the plan to reach the target runway? What is the target? I just said, and you know, the DAI bond should help a lot with that. Expected token. Yeah, I mean, I think that we can sustain the 5 to 6 figure APY, like at least 5 figures for a long ass time. You know, if we were to drop to 5 figures right now, like even with the reward we have, we could do 10,000% APY for like 7-8 months. You know, it's not too hard to do. You know, because our supply is only like 100K, so we can, especially because we're deferring them into the future. I think that it's a lot more powerful of a dynamic, because you know that you're going to get them, but you need to wait for them, and so there's much less pump and dump incentive. You know, it's much more be a long-term holder. You are incentivized to stay here in the long term, especially with the compounding effect, because compounding only kicks in over the span of time. What happens to rebases that are not called within one epoch? They would be missed. You can't call 2 in one epoch. If anyone has been calling the reward distribution lately or the sales contract, please use the staking distributor. I'll put the link in the announcements again, and then use one. We're also going to set up soon a keeper contract on mainnet that will connect into our front page or website, and basically it will, you know, put those contracts in front of you and then give you a little incentive, like, you know, 0.1 ohm or something, to call the function for us, so we don't have to do it ourselves. And like some people have been really good about helping, but yeah, like, so, you know, that way it's completely automated and y'all are just incentivized to do it. Okay. So can you elaborate on DAI bonds? What were the mechanisms? So it'd be the exact same mechanism as we have with bonds right now. Literally the exact same. The only difference is that we're taking DAI, and we need to constrain capacity even more than it is right now, because that DAI will create a ton of new supply. So I was thinking, you know, we would start at probably a maximum of $80,000 per 5-day period that comes in. Yeah, like that's pretty much the only difference, though. And it'll kind of play against the LP bonds, where one drops and the other rises, and then vice versa, and they can kind of like, you know, ebb and flow together. Would it compete with LP bonds? Like, yes, but I think that, like, you know, $80,000 in a 5-day period is not too much to compete with. You know, I think that makes up like, you know, 15% of the LP demand. But there seems to be an excess of demand on the LP bond side, and so I think it should be a good addition. It'll also be for the end user. You know, you just need DAI. You don't need Oh, and one thing is, it does max you at some amount of circulating supply that you can buy, just to prevent someone from coming in with DAI and buying like a whole bunch of supply. It will limit you with how much you can purchase from the protocol. And it'll also let you give a slippage limit. That's something that we added, which we will eventually roll into the LP bonds as well. We just need to migrate that contract. But right now, if someone like gets to the contract before you, you're going to end up paying the higher price, and you have no choice. This would let you give like an upper limit. Can we create WS ohm and include that in the pool? I do not know what that means, but it sounds intriguing. You want to expand on that, Dan? Chat a bit about SM and then push back. Yeah, that's one of the things. I was thinking about that, and I was, you know, let's open the floor to discussion. Should we keep SM locked? Should we open it up for composability? My stance on it is kind of that if we make it composable and transferable, that, you know, suddenly that supply is back on the market, you know, and it has no locking effect because you can, you know, you just have to, like, there's no point of SOM at that point. You know, we might as well just use OM as the rebasing one because there's no difference except a transaction between OM and SOM. You know, so I would love to hear people's thoughts on that. Like, yes, it's better for you as a staker, but you're already earning 100,000% APY, and like, you know, do you really need more yield on top of that? I don't think it's for me to decide. Opening it up, we'll see where that heads. Where are we? Done. Yeah. I would agree, Dan. Like, you know, staking is a passive strategy. Some level of dilution is going to occur. You know, maybe we don't correct it. Maybe we only correct it as a half step. You know, again, I'm going to be active in here talking to you guys about this stuff. Okay. All right. I feel like we're pretty okay, here's the last one. Can you raise the debt ceiling? Today is a negative 2% discount. Please share with us why it's beneficial to not take on more LPs and disincentivize LP holders to bond. Because we want to spread out this growth over a span of time. So with the bonds, the capacity is computed based on total supply. So when a bond is created, it increases that total supply and it actually makes the ceiling higher on an exponential basis. And so it's the kind of dynamic where as we grow, we should be able to grow the LP bond demand with it because right now it's a very competitive environment. You know, you only have a very short window to get those good bonds and then they're gone. Someone else is going to snipe them. That's what we want. You know, it maybe it's not as good for you, the bonder, but it is way better for the protocol because you have people gaming how to give it money. And they're going to compete with each other over how to give it money. Like, you know, that competitive dynamic in my thing. You know, we will offload some of that extra demand into the DAI bonds is my thought. And then, you know, that'll kind of like alleviate some of that. My thought is that we don't even do the sales contract itself. Because there's just like a lot of liability there with dealing with price data. I see the manipulation potential there as vastly higher than DAI bonds, and they serve the exact same purpose. Except with the DAI bonds, it's an independent market that can drive itself. You know, we could talk about changing the vesting period maybe so that it's a little bit more tied to the market, less tied to the market. I like it seems like a better mechanic. Basically, when I designed the system, it was with the sales, and the bonds only came, you know, months after in like January or February. I feel like that was kind of a breakthrough. I wanted to see how they worked in real life, and the LPs were a much more like strong use case and reason to do them. I think that they're better, and we would just use, instead of a sales contract, we would have open redemptions on OM where you can always trade one OM for the underlying behind it. And, you know, it kind of has the effect of, what's it called? Like, we have a hard floor at $1. You can always claim those assets if you want to, but, you know, if we're trading at $800, there's no reason you would want to trade it in for one. And then, you know, everything is market driven, but detached from the market. I don't know about would we stop sales lights. That's a good question. That one is like moderate enough, like it's on a small scale that we could leave that. Let's see what everyone says. You know, I have no strong stance one way or the other about it. Yeah. Oh, did yield aggregation get covered? Yeah, it'll be part of the you know, that's the last thing that like still working out how to handle. just because I would like to do it in the most like trust-free manner possible. And it's a little tricky because you have to be moving funds, and like if you don't know every strategy that you're going to be using before the fact, then there's some arbitrary aspect to it that has to be dealt with. So that's kind of like the whole new treasury is set up basically, except for that one. Then that's kind of the new problem to tackle right now. Okay, we'll wait for this question from Mick, and then we'll close that. Yeah. Okay. Yeah, Apollo, you want to hop on? Yeah, I meant to bring you on. I'm actually sorry for that. Yeah, you want to hit it, Apollo? Hell yeah.
Hello. Hi, everybody. This is Apollo. I've been in every call very silent. No, not a lot of people know me. I generally do not speak much, only throw a couple of comments here and there. I think Sus is doing a fantastic job. I've been, since the very beginning, helping in any way I can, bringing some experience of my own in markets, technology, and econ from a very highly inflationary economies that I know very close. So happy to be around. Any questions that can help? The team knows me, and I don't think I need to add much to this fantastic call. And Susie is doing a great job. So we are all here to help and push forward. As you all saw in the dashboard, the health of the protocol it's great. It's growing at a pace that sometimes is a little worrisome because it's too bullish, but I think slowly and a good pace we're getting there. So thanks Sus for the time.
Thank you. Apollo is our secret weapon. Do you want to go into your role a little bit? Or he's basically like management, legal, and assistance on the tech side. Yeah, Paul has a lot of experience with startups and tech entrepreneurship, and has been incredibly helpful and valued team member. We have no integration with NFY, and I will post a link to the call after this. So with that, I feel like we can close it up. This has been great. I hope this was informative, and you guys enjoyed, especially the guest speakers today. Give us a FUD. I don't even know, man. I don't even have any FUDs left. Yeah, so I mean, thank you guys again, for being the best community in DeFi. Y'all are literally so awesome, and like, I'm proud to be like, a part of this, because something awesome is being built here, and it's exceeding me in an incredible way. When can we see a materialized output from capital integration? It would be part of the Treasury V2, because we need to get that set up to be able to move funds around, which is just like a thing that we need to think through. Okay. So with that, we will call it a day. Thank you all for coming, and I'm going to hit it with some tunes and we can vibe a little bit.